Welcome back, everybody. I hope you guys all are having a phenomenal weekend. We have a lot to talk about as we get into this next week in the market. We have a very big FOMC meeting coming up on Wednesday. We have trade talks continuously developing, which we are going to be talking about in this video here. We have a lot of significant earnings coming out. Again, some of your guys' favorite names, Palantir and HIMS reporting tomorrow, which we are going to do a little bit of a preview on in this video here. But guys, there's a lot of information in this one. Before we get into all of that, if you guys do enjoy the information and analysis I provide for you guys in these videos here, make sure you go down and hit that like button. Costs you nothing to do it, but it helps me out a whole lot in spreading this information out to as many people who actually want to learn. And again, if you never want to miss another video like this, make sure you are subscribed and turn on notifications so you're notified every time these videos do end up getting posted live. So let's get right into it here. First, we do have a little bit of an update here on these trade talks with China. Now, there's been a lot of talk about new trade deals kind of getting announced really kind of over this past week and moving into this week, which the markets would definitely like, especially after what we saw with that first quarter GDP report, when a lot of these new imports were coming in and creating a significant drag down to GDP, which we are going to talk about in a second here as well. But Beijing weighs fentanyl offer to the US to start trade talks, addressing Trump's team's concerns over China's role in the fentanyl crisis could let both sides soften trade stance. This is something here, guys, that the markets will definitely take very, very positively. Now, just examining what we have in terms of the data this week, this FOMC meeting on Wednesday is a relatively big one. I know there's a lot of people out there right now that are looking for rate cuts to happen at this May meeting. And what we're going to cover right now, again, that's very, very unlikely that that's actually going to happen. Just looking at the overall probabilities here for rate cuts coming at this meeting that we're going to be seeing on Wednesday. Again, there's a 97.2% probability right now that there are going to be no changes to the federal funds rate at this FOMC meeting. And just kind of taking a look at the data to understand exactly what the Fed is looking at here. Well, first, this is the United States unemployment rate. We can see that it has slowly moved down again going into 2022 and 2023, and we have remained at relatively flat levels here. We have seen a little bit of a tick up to unemployment, and with this slowing growth and the fear and uncertainty that we see in the overall market right now, there is a risk that unemployment starts to move significantly to the upside, but that is not something that we have necessarily seen just yet, and the Fed is going to need to see confirmation of that data in order to act. Now, moving on here a little bit, let's take a look at the Fed's preferred metric of inflation and see how that has fared over the last couple of months here. When we take a look at PCE, which again is the Fed's preferred metric of inflation, we are seeing PCE starting to move to the downside here. So as you can see, again, unemployment rate slowly moving to the upside, inflation moving down here. This is moving in the right direction for rate cuts coming in the near future, but it's not all the way there yet because again, with everything that we have seen with this new trade policy coming out, all of these new tariffs, we haven't seen all of the effects and impacts of this new trade policy in the inflation data just yet. The April reading that we're going to be getting in May is going to give us a lot better of an insight into the actual effects of these tariffs here. And if then we still can continue to see either inflation kind of flatlining or continuing to move to the downside, we could easily see the Fed start to move in June, which when we come back over here and take a look at the Fed Watch tool, again, there is a little bit higher of a probability, 34%, that the Fed is going to be cutting in June here, but it really is all going to come down to the overall economic data that we're going to be witnessing. And then again, as we all know, we did recently see that first quarter of 2025 GDP decline here of about 0.3%. So again, everything is moving in the right direction here, but again, not quite there yet for the Fed to move. Now, I also want to bring up here to you guys, just giving you guys a big picture view of the overall market here before we start talking about these individual names, Palantir, HIMS, SoFi, and NIO here, that again, we are right back at this Liberation Day zone. And the market has moved very, very aggressively to the upside over the last kind of week and a half, 2 weeks here. It is very possible as we continue to get deeper into earnings season, we receive some new economic data, and we also hear some new guidance from the Fed that the market could pull back slightly here. Now, that does not mean that we are going to see these lows getting taken out here. I think Tom Lee is pretty accurate here in his assumption that Again, these are probably going to be the lows for 2025 unless something else crazy starts to happen. The China and US trade talks start to stall. You see a lot of these tariffs remain in effect. Inflation moves to the upside, and you continue to see growth slow down and unemployment go up, creating a stagflationary environment. If that happens, well, obviously the markets could sell off, but that's not necessarily what we are seeing at this moment in time here. So really at this point in the market, guys, what we really need to be at this point is cautiously optimistic. We've seen a significant move to the upside recently. We still have the potential for new trade talks and new negotiation news to come out to boost this market a little bit further here. We still have earnings, but again, we have that FOMC meeting here coming up. And again, those insights that we are going to be receiving from the Fed could give us an opportunity for a little bit of a pullback here in the markets. But again, I really wouldn't be all that worried if that is going to be the case here. So let's get into Palantir, start talking about these individual stocks here as we get into this next week. Palantir is set to report earnings tomorrow, Monday, after the close here. So again, this has been a name retail has had a lot of success with here. It has been one that a lot of people have made a bunch of money in, and congratulations for all of you guys that have been in this one for a while. I think it was last year I gave this to the private community at about $15 here, so that has been a very, very big winner for all of you guys who have been following along here. But just kind of taking a look a little bit at the expectations for this quarter here. In quarter one, Wall Street analysts projected adjusted earnings per share of 13 cents, up 65% from a year earlier, with revenue climbing 36% to 863 million here. Palantir's government revenue is projected to rise 37% to 460 million, with government revenue growing 35% to 403 million. So that quarterly revenue number, guys, is getting dangerously close to that $1 billion metric there, which I think the market would react very positively to, and I do think that could happen in the near future here, especially after we've seen developments like this. Trump budget proposes $1 trillion for defense, increasing that defense budget, which again, Palantir has such a major part in the defense of the United States and a lot of these other Western countries here. I think Palantir is set up really, really well to grow that government contracting business, and when you combine that with AIP and a lot of the other commercial revenue growth, again, Palantir is set up to continue growing. Now, what I always say when we're referencing Palantir here is, again, we have seen significant revenue growth from Palantir, as you can see, but I think that the market is going to hold Palantir to a little bit of a higher standard now than it was really a year ago here. Remember, institutions weren't really interested in this one a few years ago. We have started to see that institutional interest come in, and the performance of Palantir in terms of its share price has been absolutely phenomenal. But as this company starts to mature and the share price continues to climb up and up and up, there are going to be questions about whether or not this valuation right now for Palantir does make sense. And for me personally here, guys, I can tell you right now, this is not a name that I am looking to allocate more capital into right now just because of some of those valuation concerns. I think it's a little bit stretched, and I would love to buy this company again in the future here at a little bit of a better deal. But still love the company. I think it's amazing what Palantir is able to do, not only for the government, but also their commercial clients. And I do think that this one is still going to have a lot of amazing long-term potential here. In earnings tomorrow is going to give us yet again another amazing insight into what this unbelievable company is working on and where they see things headed going into the future. Now let's move on here a little bit, guys, and start talking a little bit about HIMS. Now, HIMS over the last week here has had some very, very strong performance, and part of that is the result of this recent partnership between HIMS and Novo Nordisk to improve obesity care access in the US, and they're poised to significantly impact the company's offerings in the chronic conditions market. By expanding its portfolio to include innovative weight management treatments, this collaboration could bolster subscriber growth and revenues, which, remember, when we look over here, HIMS has had some very, very significant and aggressive subscriber growth over the last couple of quarters here, and really over the last 2 to 3 years here, and this is yet another very, very positive development for them here. Now again, HIMS is set to release its earnings on Monday, May 5th. Historically, the stock has displayed considerable volatility around its earnings and announcements. In the past 5 years, it has recorded a negative one-day return following earnings in 56% of instances here, with a median negative return of negative 5.8%. and a maximum negative return of 22.3% here. The upcoming earnings report is especially significant as analysts project earnings per share of 23 cents on revenue of 538.4 million here. Now, when you think about a company like HIMS, like SoFi, like Palantir, a lot of these names that have had significant growth over the last year and are honestly performing very well, it does bring up the possibility for some really, really strong numbers to come out with these earnings here, but the stock doesn't necessarily reflect that just because investors are going to look at those numbers and say, okay, this isn't necessarily one that we want to buy in the present, but if we continue to see that growth moving forward, again, that could be something that more institutions, more retail investors continue to put their money into. Now, I think what a lot of people do in these environments surrounding earnings here is they'll get one, a little confused or a little frustrated depending on what the results of earnings actually are. When we look at earnings here, guys, especially with what we saw with SoFi last week, having very, very positive earnings, and then not necessarily reflecting that in the share price, you have to have a little bit more of a long-term vision here. Unless you are looking to make money that day with that company, the result of their earnings, again, is very, very important in terms of the actual numbers and the fundamentals moving forward. But unless something crazy happens and something comes out very terrible and the stock basically collapses, again, you got to think about that in more of a long-term vision and understanding that this is just more data to give you the ability to have a better insight into these companies and make better decisions moving forward. But again, even with all that being said, having that longer term vision is a very, very important thing to have. HIMS is set up to have a very, very strong next couple of quarters and years here, mainly based off the fact if you understand a lot of the trends in these different spaces here, just from a large data perspective, if you think about the obesity trends, especially in America since 1975 to 2022, obesity rates amongst women has about tripled, and amongst men over the same time period is a little bit more than quadrupled here. And that's really just talking about the GLP-1 space. And as we all know, HIMS has their hand in a lot of different elements here of health as well. And again, all of these different services that they offer, all of these different products are growing, which is why we have seen such aggressive revenue growth out of HIMS over the last couple of quarters and years here. And then I want to kind of wrap up this video here, guys, by talking a little bit about the larger time frame charts on SoFi and NIO here before I kind of send you guys on your way. Again, we're going to have a lot more videos coming out this week. So again, if you never want to miss these, make sure you guys are subscribed, turn on notifications so you're notified every time they do get posted live. Again, SoFi right now, guys, is setting up what I like to view and what we talk about in the private trading community as a post-earnings consolidation setup here. Again, very, very strong push to the upside. It did end up getting sold off, but you didn't really break to the downside any really significant levels here. You've held the daily 10 exponential moving average. You've held this daily 200 exponential moving average too. And if we can continue to see a nice period of consolidation here out of SoFi over the next couple of trading days, if we break above that range, you could easily see yourself right back up at that 14 to 1450 area in the very near future here. But again, it is going to depend on what happens this week with all of those trade talks, with the FOMC meeting, and again, a lot of the other comments that are going to be coming out from all of these Fed speakers that we're going to be seeing here on Friday. Then NIO, again, really knocked it out of the park here with their deliveries this week. When we come over and take a look at this chart, we talked about this in an earlier video. We can see, again, the growth of NIO's deliveries right now are very solid, but again, what is always going to come down to with this name in particular is execution. There's been a lot of overpromise, under-deliver with this name over the last couple of years here, and being able to hit those goals that management has set out for NIO really over the next kind of year and a half, 2 years here. If they can meet those goals, that is going to be able to drive a lot of investor confidence that the things that NIO's management are saying are actually going to come true into fruition here, because right now, with what we've seen constantly and time again with this name here, is the management will come out, they will make some very large claims, and they're not able to meet a lot of these expectations. But if that starts to change, you can then see a very significant re-rating in this name, not only because of the results that they're going to be generating, but also because of that investor confidence there. Now, again, we saw a very solid breakout on NIO recently. It has recently pulled back right around that $4 area here. And again, that key level that you're going to want to watch is this 10 exponential moving average on the daily time frame here. If we end up breaking down below and starting to sell off a little bit more, I could see us going down to the bottom of this zone here, this 360 area. But again, these trade talks are obviously going to have an effect here as well. We don't necessarily know what the results yet are going to be between the trade talks, not only just between China and the US right now. Again, NIO doesn't sell any cars in the US, but what can affect Chinese electric vehicles here is these trade talks between the US and the European Union, because China or these Chinese electric vehicle companies are selling some of their vehicles over there. So part of the deals either prohibit or increase tariffs on some of those Chinese electric vehicles. That could hurt NIO. That is a risk moving forward here. But again, with these sub brands and looking at the overall environment as a whole, it is going to be difficult for a lot of people to justify spending their hard-earned money on these premium electric vehicles, but having Onvo and Firefly is definitely something that NIO needed to do. We need to see more execution on those sub-brands there so they can increase deliveries, increase their revenues, and potentially grow their margins even further moving forward here. So guys, that is going to wrap up this video here. If you guys did enjoy the information and analysis I provided for you guys, make sure you go down and hit that like button. It costs you nothing to do it, but it helps me out a whole lot in spreading this information out to as many people who want to learn. And again, if you never want to miss another video like this, make sure you're subscribed, turn on notifications so you're notified every time these videos go live. But until next time, guys, I will see you. It's going to be a crazy week. Peace.